Hey guys, hope you and the families are doing well. The wonderful thing about trading is trading is a skill set. And if it's a skill set, it means it's a skill-based activity. And if it's a skill-based activity, it means you can get better at it. You can train your skills. So the important part here is break it down into the component parts. So when you think about a trade and you think about what makes up the components of a trade, there's 4 areas. Number 1, how do you identify a high quality setup? Number 2, how do you control the risk to create an asymmetric risk versus reward trading opportunity? Number 3, how do you mitigate the risk so you free roll the position and you're risk free? And number 4 is what are the selling rules and selling guidelines that you are using to optimize the profits, both in terms of monetary gain but efficiency of the monetary gain. And I think bar by bar deliberate practice, like I'm about to show you, is the most efficient way to be improving your skill set at trading. Realize that trading is a skill set. You can get better at certain parts of trading when you deconstruct it and you break it down into the component parts. So you're going to see a bar by bar deliberate practice session in Shopify. There's going to be 34 trades, 3 of which were break even, 15 winners, 16 losers. So the win rate is 48%. The risk versus reward was 4.74. The average gain was 15.99%, and the average loss was 3.38%. So I would really encourage you, start doing your own bar by bar deliberate practice sessions. Commit to 1 session a week, 2 sessions a week. I think it'll significantly improve your trading as a skill set. So I really hope you enjoy this video. Market Surge are today's video sponsor. If you're interested in a discounted trial, then there is a link in the description and the comment section below. Okay guys, we've got Shopify loaded up. We're going to be using the TradingView bar by bar replay function. I'm going to be looking for trigger bars, shakeout demand tails, gap down reversal bars around 1 or more key moving average in the context of continuation basis building. So we're a few bars in here, shakeout demand tails coming through. You've got the 10-day EMA, which is going to be that black line just in there as well. So okay, we've got the 10-day. Okay, this bar here, inside bar, shakeout demand tail going out on the high of the candlestick. Let's take a look at the risk here. We haven't got the 20-day ADR percentage coming in yet, so let's just assess what the risk is. Around about 5% if we were to round it up. Let's go for that. What I'm going to do is make it a bit harder on myself. So I'm going to set the free roll target 1/3 at 2 times the initial stop loss. So it's going to be $3. That's probably split adjusted a couple of times, I would have thought. So okay, we actually get filled on this bar here. So we actually get filled on that little supply chute coming through. Okay, we'll keep our stop loss there. Okay, good bar here. This is actually a gap down reverse bar. If I didn't have a position, I thought the risk made sense. Maybe targeting that. Okay, we'll let it play forward. Right, being able to free roll there at $3. So now we've got 1/3 of the position off. I'm going to be looking to ride the 10-day May, maybe the 21 when it kicks in as well. If I think it gets extended, then I'll consider choking part of the position off. So it's getting out well. 52-week highs. Okay, a little bit kind of volatile, but it's fine now. Okay, still kind of powering out, that's fine. Okay, big supply shoot up here. So you see this supply shoot? This is where prices trying to go up, but sellers are bringing it back down. So that's called a supply shoot. What I'd probably do there is actually think, okay, short-term extended. So what I'd do is I'd just put a stop loss underneath the low of the bar because I'd expect to pull back to the 10-day EMA. So I'll put a stop loss at that level about 380. Okay, so we exit part at 380 in there like that, and now probably going to look to ride maybe the 21, maybe the 10. We'll see what comes through here. Okay, I don't like that bar that's happening there. I'll probably look to ride the 21. No, close below the 21, so then the exit would be at the close there. So let me take you through and I'll show you how we do this in the spreadsheet. So okay, we're going to free roll at 2 times the initial stop loss, so 4% around about 10% or so. So we're at 10%, and then we'll go 10%. And then 38%, and then at the close there 14. So 10, 38, 14. So we go to our spreadsheet and we go 10, 38, 14. The spreadsheet is available for you. There'll be a link in the comments or description if you want to use it. It's what type of it's kind of like a breakout buy. So I'd put it as a breakout there, and we go Shopify, and then we enter the average gain, which is 20.67 like that, and that will do a compounded return on investment over there. Once we get a few more trades going through, it'll all start making sense. We need to get for the average gain and average loss to be working, we need to have an average gain and average loss in both the breakout and the pullback column. So that'll start working probably a little bit later on when we get some more trades. Okay, kind of rolling back over here. We'll see if it sets into some, I quite like that bar, nice reversal bar. The risk is probably going to be a little bit wild on that one. Yeah, 8.5%. ADR is good at 7.96%, that 20-day average daily range percentage, but not really feeling that. too much risk. Really want it to be half, 2/3 versus the ADR percentage. I mean, sometimes 1.5 times, but its stop loss have to be in with like a 4 or 5. Okay, it's coming up to earnings, so it's shaping up quite nicely. Let's see what the earnings reaction is here. Okay, good earnings reaction. So now what I'm doing here is, again, mental representations. Peak by Anders Ericsson, fantastic book. So here, potential cup. I'd be looking for a handle to kind of pull back down into this 10-day EMA. Let's see how it kind of plays out. Okay, around the 21 now. I'm going to get candlestick, gets onto the 50. Let's go take a look at this. Let's see what the risk is. Probably going to be too wide. Yeah, 7.5%, and I'll round it up to 8%. So no, I think it's too much risk for that one. Okay, now we get this. Now we get this inside bar shakeout demand tail. What's the risk going to be like on this one here? Yeah, 4% off an ADR, so 5% off a 7% ADR. Yep, I'll target that one there. So free roll target is going to be at 381. Okay, so we get filled on that bar there, so that's going to be our entry. I'm going to use hypothetical buy stop limit orders, and just so these videos flow nicely, assume perfect execution. Okay, we'll get knocked out there, shake out demand tail to the 50, may consider retargeting it back. We'll round that up to a 5% loss, and that's going to be a pullback. So we go Shopify like this, and we go minus 5% like that. Okay, great, on to the next trade. Let's see what the risk is going to be. 4%. Could I try it again? Yeah, I think I probably could try it again actually. So let's go there, like that. So again, another kind of 5% stop on it. So if we get filled, no, we don't get filled. So it's got to move through the high of the prior day, which would be $3.50. That is the nature of a buy stop limit order. So let's play this forward. Okay, avoid all of this. We want the stock to be in a nice uptrend. This bar here is good. You see that, a lot of demand. Call this bullish synchronicity. Gap up, open on the low, push up, immediate presence of demand like that. That's signaling there's a lot of buying. So now let's see if it can kind of pull in, reset. I quite like how this is kind of a deep cut, and then the handle pulling into the 10-day. But we kind of shake out demand tail there. Volumes dried up. What would the net risk be? 6% off an ADR of 6%. Yeah, okay, let's target that. Kind of free roll back into these highs. Let's see if we can get something going. We're still in here. We're not yet stopped. If I didn't have a position, I think I'd be thinking about a position. I really like that bar, and that nice gap down reversal bar there. Okay, let's see if it can push. Okay, great. We've been able to free roll the trade at 381. So now we free rolled the trade. We'll play it forward, see if it can start trending, and we actually then get knocked out, break even. I mean, in real life, I probably then got my stop loss around about break even, so it would have been a marginal gain, but let's say we get stopped out there. So that's just going to be a break even trade, and that was on a pullback. So it's just good to kind of check the amount of break even trades that you're having as well. For me, it's usually around 20-25% of trades are break even trades. Let's see if this can reset. We've got earnings coming up, so let's see what the reaction is going to be to the earnings. A bit of a nothing burger on the earnings. Okay, really like when you see a nice powerful move up on the earnings, and then it goes and builds a continuation type base, flag, pennant, wedge, all of that kind of stuff. So okay, 200-day moving average is kicking in, which is going to be the red line that you see there. Okay, the volatility is coming down in the stock. We're now beginning with a 3 on the 20-day ADR percentage, so we're going to be looking for tighter risk control. I quite like that shakeout demand tail the bar before. I'm going to see what happens on the earnings. Okay, we're approaching the earnings. Let's see what happens. Terrible reaction to the earnings. So again, the stock's just not really acting right as of yet. Okay, this is a little bit better maybe, like decent sized base building. Can it potentially pull back in? Let's see. Okay, nice shakeout demand tail. So this is a shakeout demand tail, bit of like a kind of double bottom ish base. You could look at it as kind of like a bigger cup, and this feels like a bit of a handle to me. Okay, shakeout demand tail undercuts these recent lows. Yeah, like that one. That's kind of a textbook one for me. So there we go. Stop through there. Okay, nice tight stop, around about 3%, same as the ADR percentage. That's absolutely fine. Okay, so we a little gap up there. I would try and buy it within 0.5%. So I would get filled a little bit higher up. I'm going to say I get filled on the open there like that. So that's going to be my entry coming through there. Free roll target is 351. So let's play it forward. Heading into the earnings, I would have a little profit cushion. Okay, maybe I hold, maybe I don't, but okay, we've been able to free roll it on the earnings coming out of this nice base. In real life, I probably would have pushed my stop loss up, kind of free rolled it, understood the implied move, but for the purpose of these videos, let's keep them flowing. So this is a better earnings reaction and then subsequent trend. So looking to ride the 10 and the 21-day EMA, which is going to be the black and the blue line. Okay, pulling into the 10-day EMA, potentially a trade to be had there. We'll see. it is kind of tightening quite nicely on the 10-day. So what I'm thinking here, this obviously still in this one, it's not closed below the 10, could target it through the high, stop underneath the low. That'd be kind of trigger bar S. So yeah, let's try and add to the position through that bar. It didn't get filled, but I'm going to retarget the next session, as I like that bar even more actually. So I target that there, about a 1.5% stop. Did it go through the high, 414? No, so it didn't go through the high of the bar, so it's got to go through the high of the bar to trigger a buy stop limit order, which is why I like using them. What I would do here though, because it has closed below the 10-day EMA, I would actually take off a third of the position. So we've still got a third left that I'm looking to ride this blue line here, okay? Okay, nice reversal bar coming through. Well, that looks like a bit of a change of character to me. Let's see if this holds the 21-day EMA. Oh, it does with a gap down reversal bar. So that's a gap down reversal bar. So see how the prior close is here, gaps down, opens here, pushes up, low volume as well, and it's undercutting these base lows. I like it. I would target another entry right through there. Initial stop, 6%. I'm really forcing this one, but I like the 52-week highs. I'm really forcing this one. Okay, it didn't get filled anyway, which is probably good because I was kind of forcing that too much. Then you get an inside bar. It does close below the 21, but it's an inside bar on low volume, so I'd still hold that final third of the position. Okay, I quite like how this is now shaping up. Gap down reversal bar, nearly back-to-back inside bars, and this tight little bar here, volume's really dried up. I would target it through there. It's quite a tight bar, so the risk, yeah, risk is less than the 20-day ADR percentage. We'd round it up to 4%, but yeah, like that. So still got 1/3. This one still hasn't triggered, but I then quite like that bar coming through there as a shakeout demand tail. I feel like it's getting ready to go, like it's tightening quite constructively, which is what I like to see. So 3% ADR, 3% stop off a ADR of 3.6% is fine. Okay, now it actually moves through and we're able to free roll on the same day, so that's good. We're in, plus we free rolled it on the same day, and we still got this 1/3 back here. So let's see if a decent trend can play out. So we've got two positions live. Oh, we're going to get shaken out of this position. What's the low of that bar? 407. So we get shaken out of this position, break even. Again, in real life, I probably got my stop loss there, so it'd be a marginal kind of gain, but purpose of these ones, so they flow better, I'm not doing that. So we're going to have a break even trade there, and that's more of like a little kind of breakout buy. So a little bit kind of annoying, but is what it is. So another shakeout demand tail. I would still have, because it's not yet really close below the 21, so I'd still have this third back here, and I quite like the shakeout demand tail. Would I be targeting it? What's the risk going to be? Let's take a look. So through the high, stop there, 6%. It's probably going to be too much risk. Yeah, too much risk, I think. Let me just go back there. Okay, starting to tighten up. Can it be a better looking candlestick? Let's take a look. Tightening, it's not quite giving me quite the candlestick that I want to see as of yet. Okay, first close below the 21, that's going to be the exit for me. So the initial stop loss was 2.5%, so we're free rolling at 5%. So we got 5%, 23%, and then over here, so 523.28. So what we do is we go 523.28. So then the average gain is going to be 18%. That for me is a breakout trade. I'll tell you what, we'll just put it in as a pullback just so we get the average gain working a little bit better, and then 18.67 like that. So now we've got the average gain coming in, we've got the average loss will kick in when we get an average loss in the breakout column, because the average loss at the minute is obviously 5%, but just for so the spreadsheet works, we just need to get one in both of those, and then this average loss will be correct. So okay, that's fine. Again, trying to ride the intermediate term trend and then see what happens basically. So how far the stock wants to go. Maybe we get something around the 50-day. I quite like that, a little tight bar around the 50-day. Yeah, I think I'd probably target that. As it pulls back down there, 3%. Yeah, let's target that, see if we can free roll it into the base highs. No, we can't because it didn't move through the high. So there, shakeout demand tail to the 50. Really like that. So let's see. I know it's 5. I like the shakeout demand tail to the 50. So we get filled in there. Our free roll target is 467. So let's play it forward. Giving it a little bit of time. Bottom area, I think I may just kind of exit the position there. We've got earnings coming up. We'll just see if we get stopped. I'm not going to hold this into the earnings, which I imagine is the next day. So I'm just going to suck that up, take it on the chin, exit there, 4% loss. Yeah, that'd be me. I'm not going to kind of hope and pray into the earnings. So let's put that in. So pull back by, let me just, I know it's not a breakout, but I'll put it in as a breakout so that average loss starts working. So let's go -4, and then the average loss there should be -4.5%. Yeah, so that's all good. So I'm not going to hold this one into the earnings because I got a loss on it. Had I have held it, it would have worked. But again, the thing could have just gapped down 20%. I wouldn't know. So I'm not going to do that. So let's play this forward. Ideally, the stock gets back in an uptrend above all its moving averages. It's kind of chopping around at the minute. Okay. Kind of okay looking base here. One contraction, two contraction, tightening, volume drying up. Yeah, not bad. Maybe through the high there, stop there. What's our initial risk going to be? About 3% if we round it up. Yeah, free roll it, kind of looking around base highs. Okay, doesn't get filled. I would then cancel the order as I don't like that final bar as a trigger bar. Maybe we get a shakeout demand tail down at these lows. Okay, this is kind of tightening quite nicely. Okay, a little kind of pop back up there. I quite like that little pivot that's building. I'd probably go there. Like I quite like that bar. Feel like it's going to try and come out of this base. Look how it's just tightness, low volume. The RS line has turned up over the last couple of weeks. Let's see what the risk is on this one. 4% off an ADR. Yeah, it's just acceptable. Okay, there we go. Good move out of there. I just really liked how this was shaping up. See this demand coming in, just tight little pullback in here. Yeah, like that. Okay, so we're in, free rolled it on that session there, taking then a third off at 476. So let's play this one forward. So looking to ride that black and that blue line, 10-day and 21-day EMA. So closes below those, looking for ads as well. No, I like that bar. Okay, that's going to be an ad for me. That's a tight little trigger bar on the 10-day. Yeah, nice tight stop as well on it. So it kind of pops up, but okay, we'll say that we get filled on a little kind of pullback in there. Okay, then we've been able to free roll the trade in there. So now we've got two trades that are live. Both of them we're looking to use the black and the blue line. So okay, decent trend playing out here. Okay, into the earning, I'd hold into the earnings. Got a good profit cushion on both of those. Look at all the 52-week highs. So I'd be holding there. Okay, just looking for closes. So that's the first close below the black line. So that's going to be a third of both the positions off there. Let's see what happens around the blue line being the 21. Kind of tightening there. Thinking about it. Maybe needs a little bit more work. It's not a bad little bar there. Not a bad little bar, that one. Opens on the low, pushes up. Yeah, I'd probably target that. Through there. Let's see if we can get another trade going. 3% initial stop, we'll round it up. Yeah, it's okay. Okay, so we get filled there. That's going to be our new entry. So we've got quite a few. I'm going to make this one pink just so I remember that we have all different trades going. Okay, can we free roll it? Yes, we've been able to free roll it. So now we have got 3 positions going. So try and stay with me here. Two positions. We're looking for closes below the blue lines. And then the new one here that we've opened with these pink arrows, we're looking for closes below the black and the blue line. Okay, so appreciate there's a lot of lines on your chart right now, aren't there? Okay, don't like this bar here. Gap up, got sold into, popping the volume as well. That's an amber signal right there. Just be mindful of that. Okay, it's still going. Right, change character there. So this new, the most recent position, we're going to take off a third of the position there. So now we've got 3 positions and we're looking for a close below the 21-day EMA. So we kind of concentrated into Shopify right here, okay? So we're looking for the close below the 21-day EMA. It was kind of tightening in there. That's a nice shake out demand tail. Should we get another one going, get 4 going? Is that going to confuse people? Let's try and get 4 going. Right, let's do it. Okay, we're targeting another position through the high. We are concentrating into it. So we do get filled on that bar there as the high is 701. We're going to have to do this with a different color. Okay, let's make this one orange. So we get 4 positions going in this one now. The free roll target on the newest one is going to be $7.42. Let's see if we can get there. Can we get there? Yeah, okay, we've been able to free roll it. So right, we've got 4 positions live. 1 we're looking for a close below the 10-day EMA, and then all 4 we're looking for the first close below the 21. This is pyramiding and concentrating into a leading stock. Okay, this is quite a good example, isn't it? Okay, looking for the first close below the 10-day EMA, which is going to be there, going to take off some. So now what we've got, try and stay with me here, we've got 4 positions. Okay, we've got this one that we brought down here, this one here, this one here, and this one here. We're now looking for a close below the blue line, which is the 21-day EMA, and then we're going to exit the position. I would hold all of these into the earnings because we have a very good cushion on it. Okay, still going. Maybe we get another spot to add. Gap down reversal bar. I think the risk is going to be out of whack. Yeah, 13%. Not going to do that, but good gap down reversal bar, like that. Sign that institutions are around. Ooh. Okay, another kind of shake out demand tail coming through. Is it going to confuse you if I get 5 trades going? Should we get 5 trades going? Let's get 5 trades going. Come on. let's get 5 trades going. Okay, it's going to be about 4%, same as the ADR, that's fine. So here we go, let's try and get 5 trades going. Okay, we've got 5 trades going. We are really concentrating in Shopify here. We're going to need another color, aren't we? Let's go purple. Right, free roll target is 990 for this 5th trade. Okay, here we go. Did that hit 990? That hit 994. So okay, we've been able to free roll there, right? So now we've got 4 trades where we're looking for a close below the 21-day EMA, and this 5th trade we're looking for a close below the 10-day EMA and the 21-day EMA. Okay, let's play it forward. That's going to be the exit on the entire position. Okay, that there is going to be the exit. Now, it didn't knock us out break even on this final one. It's going to be a marginal gain, but that there, change of character, bearish synchronicity, pop in the volume, widespread candlestick, opens on the high of the bar, goes out on the low of the bar, not good. So this one here, okay, we're going to have a gain of, so 3.5% times by 2 is going to be 7%, and then this part here is going to be minus 1.5%. So we've got 7%, and then we've got minus 1.5, minus 1.5. So 7% was a free roll, minus 1.5, minus 1.5. So that's going to be an average gain of 1.3. That's going to be a breakout one there. So I'm kind of doing these in reverse chronological order. So here we've got a gain of 1.33%, and then let's just keep working back. So remember that there is going to be the exit on everything. Okay, that's going to be the exit on everything. So this one here, okay, our entry there, so our initial stop loss was 3%, so it's going to be 6% to free roll. So we've got 6, we then took part off there, so we've got 6, 4 and 31. So we go here and we go 6, 4, 31 like that. So the average gain is going to be 13.67%. Let's just call it a pullback buy just so I can kind of speed up a little bit. It doesn't matter too much for the purpose of these videos. So that's going to be that trade there, the kind of orange trade. So we can now delete these ones. We've then got another one to go and fill in, which is going to be our pink trade. Our initial stop loss was, let's say, 2.5%, so we're free rolling at around about 5% or so. So we've got 5%, 13%, and then 50%. So 5, 13, and 50. So that's going to be 22%. We'll just say that's a breakout trade. Again, I'm just trying to speed this part up a little bit for you guys. So that's going to be that one there. So that deals with the pink trade. So now we can just delete those. And then we had 2 prior ones. So that was a really big trend we just rode in Shopify. Nice, right? So this one here, this is a, let's say, 1.5% stop. So we're free rolling at around about 3%. So we've got 3%, and then we got 17%. So 3, 17, 79. So we go 3, we go 17, and we go 79 like this. So that's going to be an average gain of 33%. So Shopify, and then 33%. So hopefully that this trade here, like this part, was really good in terms of showing you how to concentrate into position. That's going to be the close below the 21 for that one. So this one here, initial stop was 3.5%. So we're free rolling on the first day at 7%. So we've got 7, 34, and then 105. So what we do is we go 7, was it 34, and then 105. Let me just double check that. 7, I forgot the middle one, 34. There we go, 105. So the average gain there, that's going to be, yeah, that one there is a breakout. That's going to be Shopify, 48.67%. Okay, nice. So yeah, happy with that one as kind of a deliberate practice as well to show you how to like get in to positions and concentrate in leading stocks. How do you know it's a leading stock? Look at all the 52-week highs on my relative strength line. If you want to see the indicators and the RS line, the RS line's right there. This is the ADR percentage that I use. So yeah, okay. So that's a change of character for me. So, now you get a shakeout to Martel off the 50-day initial risk. I don't want to be a 9% initial stop loss, not fancying that. Oh, that was a nice gap down reversal bar. I missed that one, I went too quickly. That's a nice gap down reversal bar. Okay, now it's tightening here, so you get this nice little like trigger bar. What's your initial stop loss going to be? Let's take a look. 2% initial stop off an ADR of 4%. Yeah, I like it. So there we go. We're in that session there, and then our free roll target is 958. Let's see. So this one here, it looks like it pops. What's the low of that bar? 903. But it looks like it kind of pops. I think we're out break even on that one there. I think it kind of gapped, pushed, and then went down. So that's just going to be a break even trade. It's more of a breakout trade. So again, another break even trade. It's absolutely fine. It is what it is. On to the next one. There's always another bus. There's always another train. There's always another trade as well. Nice shakeout to Martel. Yeah, don't mind that. Let's target that one there. Goes out on the high of the session. 5% off an ADR, about 5%. Yeah, it's fine. Okay, it doesn't trigger. It's got to move through the high of the bar. That's the nature of a buy stop limit order. Let's keep going. Okay, kind of tightening. We'd like to see this opens on the low and then pushes up. I quite like it. Little kind of low pivot forming here. Yeah, let's try that. Here we go. Let's see if we can get something through. No, it doesn't go through the high. Little shakeout demand tail in this region. Oh, I like that bar there, opens on the low. Just want to see it then move through. It's going to be a pretty tight stop. We'll round it up to 3%, but 3% off an ADR of 5% is fine. Let's see if we can get there. So 937 is going to be our free roll target. Let's move these back to blue. There we go, 937. Can we get there? Yeah, we can get there. So this is a little low pivot. So lower on in the base. And then do you see how, look in here, constructive price action. Look how the volume's drying up as well. Look at the improvement in the relative strength line as this little pivot is building. Yeah, like it, sizable base. Let's see if it wants to come out of this base. Maybe we get a higher pivot as well. Let's just see if this kind of holds. Okay, kind of pop testing action. Don't really like the testing action there. What I'm going to do is just take off a third there. I don't like how this is kind of pulling in here, just now closed below the 1021 and the 50, so I'd take a third off there. So we've still got a third back. See if it kind of wants to reset. I quite like that reversal bar, you know. Let me just wait, let me be patient. Oh, I don't like that bar there. We still got 1/3 left. Okay, that's quite a nice kind of gap down reverse bar. What would the risk be on that one? A little bit too much off that ADR percentage. It's okay. Oh, okay, nice gap up here. So we've only got 1/3 of the position for how we were kind of managing it in here, but that's fine. See if it kind of pulls back in. That's a nice little bar in there. Just pull back into the 10, sizable base. Yeah, target that one. Let's see if we can get 2 going. 3% stop off of 4% ADR. That's fine. Did it get triggered on that one there? No, the high was at 989, so the high of the bar is up here, 989. We were looking for it to move through $9.91 that it didn't do. So okay, we're not filled there because the order was not triggered. Still looking to probably use the 21 for the open position. There's the exit. Change character for me there. So initial stop is 2.25%. So we're free rolling at about 4.5%. So we've got 4.5%, and then we've got 1%, and then here minus 1%. So it's basically 4.5%, 1%, minus 1%. So just a small kind of average gain there. So Shopify 1.5% like that. Okay, that's fine. Don't like that final bar. It just slices through the moving averages, popping the volume. It may take a little bit of time to reset, which it's starting to do. Okay, tight, low volume. Yeah, not bad, is it? Not bad, not bad, not bad. Through the high there, 2% stop off an ADR of 4%. It's about half. That's fine. Okay, we get filled there. I think we're going to get stopped out pretty pronto here. What's the low of the bar? $9.30. So, okay, I'm going to say we get stopped out there for a 2% loss. That's more of a breakout trade. So, Shopify minus 2. What I will do though is I like how this is retightening back up, so I'd retarget it back through there. That's absolutely fine. This happens when you try and get position. So I will say 3% off a 3% ADR. Okay, good. Free roll target on this one is 994. Let's see. Okay, good. We've been able to free roll it. This can happen sometimes, like you're trying to trade through these nice tight areas. You kind of do it with a tight stop. You kind of get in, you get stopped, and then you have to retarget it back because it sets a couple of days later. It's fine. It happens. All part of trading. So looking for closes below the black and the blue line. Let's see what happens. Okay, decent trend, and I'm aware of this causality. This is a nice big base. There's a lot of causality here. So let's see, 52-week highs coming through on the RS line. Like it. If there's spots to add, I'll be looking for some spots to add. Let's see what we get. So we're looking for trigger bars, gap down reverse bars, and shakeout demand tails around one or more key moving averages. So 10-day EMA. I quite like that. Shakeout demand tail, leading stock, shakeout demand tail. Yeah, 4% stop off of 3.25% ADR. It's okay. Let's target it. So we do get filled on that one there. We've still got 2/3 of this position that we had. Okay, so we're going to get stopped out of this one here. I may exit the entire position here actually. So this one here, we're going to get stopped at a 4% loss. That's more of a pullback buy for me. So let's just change this to pullback. Remember, if you want to use this template, then there's a link for you in the description. It's free to use. It's in the description of the comment section. It'll be somewhere. What I'd do here is I would take off a third because it clearly closes below the 10-day EMA, and what I do is basically just place my stop loss on the low of the bar for the final third that we're looking to ride the 21 with. I just go, yeah, underneath the low there. Okay, stopped out. That's absolutely fine. Try to give the stock every chance. So initial stop is 2.25%, so we're free rolling at 4.5%. So then we got 4.5, 20, 19. So what we do is we've got 4.5 and then 19, 20 or something like that, wasn't it? That's going to be, yeah, more of a breakout buy. So let's put this in here. So it's going to be Shopify and then 14.5%. So you can see how we're controlling the risk versus reward, which is good. Okay, it looks like it wants to kind of tighten back up. That's a nice tight little bar, isn't it? Okay, let's take a look. 2% initial stop. Yeah, don't mind it. There we go. Our free roll target is $12.27. Let's see if we can get there. What happened on that bar there? No, okay, we're still in it. Looks like we're going to get stopped. Yeah, there we go. Okay, we get stopped, but that's the importance of having a stop loss and then not kind of second guessing your stop loss and going, it'll come back, and then just have a mega loss relative to what you are looking to take. So that's why I use hard stops invariably in the markets. Okay, 2% loss on that one. It's fine. That's more of a it's more of a breakout. So Shopify -2. How are we getting on so far? 14 trades, 17 if you include the break-even trades that we had. Average gain so far 18%, average loss 3.5%, win rate 64%, risk versus reward 5. Any of you have been trading longer than 2 weeks, you know that's some pretty solid stats right there. So let's keep going. I don't like that close below the 50. Like that looks like institutions rushing for the exits to my mind. So this may take a little bit of time to reset. So let's see what happens. We'd like to see it get above the moving averages, higher highs, higher lows. Don't like this selling that then came into the stock again. Not a fan of that. Relative strength deterioration. Not a fan of that either. So let's keep playing this forward. Okay, back in an uptrend. That RS line is turning up quite nicely. See what we get then. See what we get. Okay, gap down reversal bar, but the risk would have been all out of whack on that one. Okay, popping back up, bit of demand, some 52-week highs on the RS line. Yeah, it's starting to tighten a little bit, isn't it? Starting to tighten. A little bit of a bigger base duration, maybe. I was kind of hesitating on that bar. It would have been an alright bar to target, I think. Okay. Okay, the stock's acting quite well. Let me see. Okay, then it doesn't act well, so that's fine. You've got to be able to be flexible, adapt, change your mind. It's fine. It's just numbers at the end of the day. Okay, looking for like a higher low. I like this relative strength line. Just looking for a bar. Maybe there was something around the 21 here I could have been targeting. Yeah, maybe I was a little bit too quick through there. Okay, to the 50 we're going to get anything. A little higher low into some moving averages. Okay, potential like cup and handle forming here. Cup. Handle, what's our risk? Yeah, 5%. I quite like the bar. Yeah, let's target that, see if we can get something moving. Okay, inside bar the next session, but has a little supply shoot on it, so I'd probably wait. Yeah, good decision to wait. Okay, holds the 200, holds the 200 again. See, gap down reverse bar off the 200, gap down reverse bar off the 200. That's just indicating to me that, okay, there's some bigger boys and girls around that were supporting the stock to the 200 again. Is it going to hold a third time? No, third time not the charm in that case. It's all a bit choppy here, isn't it? Choppy. I want to see it in a nice uptrend. There we go, that's a little bit better. Some 52-week highs coming through. Big gap down reverse bar to the 21 there. See if we can get something a little bit tighter. Looking around the 21, gap down reversal bar off the 21 with a 52-week high. That's all day, every day for me. Off the 21, gap down reverse bar, 52-week high. Yeah, all day I'm taking that trade. That's our entry there. Free roll target 2080. There we go, being able to free roll it. So now we're just looking to ride the black and the blue line basically. Closes below those, we'll consider exiting parts. That's going to be an exit on part of the position there. 21 day EMA, we're going to use that as a trailing stop. Shake out demand, sell off the 21. Good RS line. I'm targeting another entry there. So this might be a little bit confusing with these two lines. But so that's going to be our entry here, so we then would have got filled at really close to where we were looking to get in at 2038 with the little shake out tomato. So we've got another trade going there. Let's make that one pink. So the free roll target for that one is going to be 2173. See if we can get there before we get stopped. Okay, holds the 21 again. What shall I add to it? I'll add to it. It's another shake out tomato. There's a lot of lines on this chart, aren't there? Wow, there's a lot of lines on this chart. Okay, stay with me here, folks. Stay with me here. So here we go. Let's do this. Let's make this one orange. Okay. Okay, we get stopped out. So the last one there, we're going to get stopped out of that one. And that's going to be for a, we'll round it up, 4% loss. So we're going to get knocked out of that one at a 4% loss. It's more of kind of a pullback buy. So this one here is going to be Shopify. Minus 4%. The one before that, so now we can delete these lines here. The one before that, we were able to get in it Didn't free roll it. It's okay. We're going to get 2 losses there. So 4% on that one as well. That's more of a pullback buy. You're going to get some strings of losses. It's going to happen to you. How are you going to deal with it emotionally? You've got to learn to do that. Okay. So 4%. And then the other one that we had, which is going to be this trade here. So we were in it here, free rolled that one. I would then just exit at the close there. That's a change character. So 4 3/4, so that's going to be 9% to free roll. We took a bit off there, so we got 9, we got 4 and 2. So what we do is we go 9, we go 4, and then we go 2. So 5%, and that is going to be a pullback buy. So that's going to be Shopify here, an average gain of 5%. Let me just drag these ones down like this, so then they start working as percentages like that, and then we go 5%. Okay, let's keep going. Let's go see if we can find some other trades, maybe something around the 50-day. So that's going to be the purple line that you see. Okay, did kind of come back. Okay, that happens. You can literally get sold out on the low and then the stock comes back. Happens, which is why deliberate practice is a good way, because it will teach you how stocks actually move, not how people on mainstream media or Twitter say they move. You'll actually see reality in the flesh. So let's just let these moving averages catch up. TradingView's on a little bit of a lag here. There we go. Well done, TradingView, waking up. Okay, to the 21. Maybe there's going to be something around the 21. Gap down reverse bar around the 21. Yeah, don't mind that. So there we go. Target it there. 5% stop. Kind of upper range, isn't it? But we'll see if we can get something going. Good. Free roll target is going to be 27.78 by the looks of it. Let's go back to blue there. Okay, good. In it, free rolled it. Nice gap down reverse bar off the 21. Leading stocks will often find supportive action around 21-day EMAs. So how can we get a trend going? Let's see what you want to do, Shopify. Let's see what you want to do. Don't really like that bar. Okay, starting to tighten. Base duration is a little bit short. That's not a bad little trigger bar. Yeah, let's target that. So go through the high there. Did it get filled through the high there? What were we looking at? The high of the bar there was 27.78. Yeah, so we've got another position going. So I'll just make this say pink or something like that, just so you can see it. Okay, we get knocked out of that one. So that's going to be a 3% loss. That's kind of a higher base breakout. So let's go breakout. Shopify minus 3% loss on that one. That's fine. You're going to have losses. It's all part and parcel of trading. What I do here is I would take off a third of the position, and I think I'd probably just put a stop loss underneath the low of the bar there. It's kind of closing on the 21-day EMA. Okay, good. It actually holds. I think I'd probably target another position there. I quite like that. Okay, it kind of gapped. How far did it gapped 1%. I don't think I would have got filled there in terms of the buy stop limit order. So I would say, okay, I'm not filled on that one. It's one that went without me. That's absolutely fine. We need to change this to blue, don't we? There we go. But again, putting the stop loss just underneath the low, they kept us in with part of the position there. So we still got a third as this trend unfolds. Nice bar. Okay, if that's obviously closed below the 10, but we're looking for a close below the blue line, the 21. There you go. That's just the exit there. Okay, change character. Nothing to argue about there. So 4.5%. So we're free rolling at 9%. So we got 9, we got 4, and then we got 11. So 9, 4, 11. 9, 4. Oh, we already had 9, 4, and then 11, and that's going to be that's a pullback buy. So we go pullback. We go Shopify like this, and then we go 8% average gain there. Okay, let's go find another trade. Maybe we get something around the 50. Let's see what it wants to do. Okay, it's kind of building a base. RS line looks pretty good. Nice kind of reversal bar there. I could be going like that and like that. What's the risk going to be? 5%. It's not bad. Let's do that. The higher the bar there, so we do get filled. I kind of force this trade. It's not really a candlestick I actually target. See if the market punishes me for it, if I get away with it. Okay, ebbing and flowing. This one here, I took a trade that I should have targeted it on the bar before. Had I targeted it on the bar before, then I would have been very close to free rolling. Didn't mean to do that. There we go. For me, I'm just gonna go. I made a mistake there. I'm just gonna exit with a small loss, 2%. I'm just gonna get out of it. I made a mistake there. ADHD impulsive moment there. I'm just gonna exit, 2% loss, and just go. Yeah, that's fine. That's fine. Let's play this one forward. Maybe we get something around the 50. Okay, gap down reversal bar to the 50. Damn, that would have been a good bar there. I went too quick. That's a really good bar. That's gap down reverse bar off the 50. Like it. See if we get a little pullback into some moving averages. Probably looking around the 21 day. That was quite a good trigger bar, wasn't it? I hesitated on that bar. Okay, to the 21. Let's see if we get a good bar around the 21. Shake out demand tail off the 10. Looking around the 21, really. Maybe we get something around the 50. Tight little bar there around the 50, but it's how it got there. Doesn't look too great to me right now. See how it kind of broke quite aggressively in here. The pop and the volume as well. It's not great for how it kind of got to the 50, is it? Okay, play it forward, play it forward. These moving averages are a little bit slow, aren't they? Right, there we go. Moving average. Okay, good uptrend. RS line turning up. Some nice pops in the volume coming through. Tells me there's a bit of institutional demand for this stock now. 21-day EMA, things around that. It's probably going to be the place for Shopify. That was kind of a little shakeout demand tail, but it wasn't a great close. Okay, gap up, got sold into. That's going to make me a little bit nervous here on any new positions. Yeah, you see, I don't know why that's not saying earnings. Kind of feels like an earnings gap. Gap up, open up here, goes out on the lows, pop in the volume. I don't like it when you see kind of earnings gaps get sold into like that. So let's play it forward. Okay, volatile, choppy. Okay, good run, 52-week highs coming through. Okay, maybe larger, bit of like a double bottom type base here. Maybe it can kind of tighten, build a bit of a Davis box. Let's see. Okay, shake out demand tail off the 10. What's the risk going to be? 5.25%. Yeah, we could be looking at targeting that. Okay, that's going to be our entry. Free roll target is 69.35. Good, we've been able to free roll it. See if we can get a decent trend. 52-week highs, always good to see in my book. See if we can get something playing out. Another shakeout demand tail. There's no real base duration. I'll pass on it for the minute. Yeah, okay. So it closes below the 10 there. I'm going to lighten this up. I'm going to take a third off there. What's the risk going to be? Nah, 9.5% is too much. I'm going to take a third off there. A little bit kind of hairy how it was trading there, but that's a nice bar. I would target that for a new position. Our initial risk is going to be about 4% off an ADR of 6%. That's okay. Okay, it's just got even tighter, so the setup just got even better in my book. So we're going to be targeting another setup here. 3% off an ADR of nearly 6%. That's fine. Okay, so we're in it. So this is going to be a new position. Let's just tag this pink. Can we free roll? No, so we get stopped out of that one, and it's going to be the exit on this one here. So we're going to get stopped out at 3%, and then 5% initial stop. So we're free rolling at 10%. So we got 10, 20, and 17. So we got 10, 20, 17 plus the minus 3% loss. So let's just do the loss first. Is going to be Shopify minus 3. That entry there is going to be more of a pullback buy. So we go Shopify, we go pullback buy like this, and the average gain is going to be 15.67%. So where are we at the minute? 22 trades, 25 including those break-even trades. So what have we got? We've got 12 wins, 10 losses, average gain 16.2%, average loss about 3.5%, win rate 54-55%. That's fine. Risk versus reward good, very healthy at over 4.5. So yeah, okay, nice, decent stats going on this one. See what we can do. Oh, I like that bar, little tight low volume bar, close on the session high, volume dries up. Yeah, like it. I'd be targeting that through there. Let's see if we can get something going. Here we go. Okay, kind of gaps up, but it probably got filled just at the low of that tail there. So that's going to be a new position. We'll just leave it as pink. What happened on this bar here? Okay, supply shoot. There's a high chance we get stopped out. No, there's then a shake out demand tail. Or would I target a new position through the high there? Yeah, let's be aggressive. Target a new position. So we're about to have two positions going. I gapped on that one, so I wouldn't have got filled on that within kind of the limit. However, we are now able to free roll this one here. It took a couple of sessions, but we got there, a little bit of patience. Okay, so now we've got 2/3 looking for a close below the black line, and then the blue line, which is the 10-day EMA and the 21. Change of character there. That's going to be a third off, close below the black line. Shake out demand tail to the 21. Like it. I'm going to target a new entry there. What's our risk? It's too much. 9.5%. Don't like it. Too much risk. Not going to target that. It's now closing below the but it's doing it and still kind of holding the tail. The final third, I would go stop underneath the low of the bar, see what you want to do. Okay, gap. You see how it's closing below the 21, but the volume's dried up, tight bars. I'd be trying to hold there. Okay, that there is then going to be the exit for me on this position. So 3%, so 6% to free roll. So we got 6, 32, and 26. So better want 6, 32, and then 26. average gain there, that's going to be a pullback buy. So average gain there is decent at 21%. So this is the thing, you'll have some small gains coming along, and then you'll have the bigger ones that come along. And as Ed Sekoda said, one big trend pays for them all. The Whipsaw song on YouTube, worth listening to. So if we get something around the 50, that just kind of popped up there. Okay, that's fine. Near the 50 again, kind of tightening. Yeah, kind of tightening in there. Let's just see. Okay, to the 50. Good reversal off the 50, opens on the low, pushes up, immediate presence of demand, 5% stop. Let's see if we can get something going. Okay, pops. I would say that's within kind of like 0.5%, it looks like. So I would have got filled on that one. I use 0.5% usually, so that's going to be that there. So we're still within that kind of like 5% territory. Can we free roll? Okay, it's moving up. Okay, so what I would do in real life there is, as this is moving up here, I just reverse engineer. I just push my stop loss up and watch those free roll targets come down. See that? How I just push the stop loss up and then I could sell 1/3 there. That's what I do in real life, but this is kind of bar by bar, so that's fine. We'll make it harder. Do we get stopped out there? What's the low? No, low of that bar is 99.39, so we're still just in it. Nah, then we're stopped out here. We'll call it a 6% loss. It's more of kind of a pullback, I would actually say. So Shopify. But again, that's one there in actually real life, like I call it active risk mitigation. So this is risk mitigation. Active risk mitigation is then when you're actually pushing it up like that. Okay, let's go and play this one forward a little bit more. Okay, popping back up. Nope, nothing yet, nothing yet. A little bit distribution there with those bearish synchronicity bars. Okay, that was a nice gap down reversal bar, but the risk would have probably been too much. Okay, kind of shaping up here. Just needs a better bar, then I'm going to be interested in it. Okay, tight bar, but I don't know, just something didn't feel quite right there. Okay, good uptrend around the 50. No, it's a bit choppy, isn't it? A little bit choppy. Let's get this thing in a good uptrend. There we go, that's a better uptrend. I went too quick and missed a couple of these. Are good shakeout demand tails off the 21-day EMA. Okay, that's fine. Okay, kind of pops, drops back. That's good gap down reverse bar, but the risk would have been too much. Okay. Okay, that's not bad. Okay, like that and like that. 3% off of 3.92%. I think we're going to get stopped on this one pretty quick. Yep, 3% loss. That's kind of a little kind of breakout trade in there. I can feel my concentration beginning to wane a little bit as we've been going for about 45 minutes or so. So again, you got to be pretty concentrated. So it's better to do kind of intense bouts of 20 minutes, 15 minutes, half an hour. When you start getting kind of plus 45 minutes, for me anyway, maybe you're superhuman. I do feel my concentration wane a little bit. I target that there. I don't quite like that bar there. So let's see. Something like this, Yeah, 2%, about half. So it moves through, and do we get stopped out on that bar there? 146. Yep, so we get stopped out there. 2% loss. That's a pullback. Okay, I think I need to try and get myself refocused as I'm targeting subpart entries. But again, that's why even when like you're doing your scanning and you're planning out your trades, it's really important to be in a good state of mind. I quite like that tight little bar there. I'll target that. Okay, entry there. Can it go? So you see this one here, so this is going to be our entry. See this one here, intraday, as it's moving out and getting really high. What I do is I just do this. See this? Watch, I'm just going to move it up underneath these lows, and then see how that free roll target comes down. You see that? That's active risk mitigation. So then you see that's now happened twice, right? So you can see why I do active risk mitigation, because in both times there, just bringing my stop loss up a little bit, okay, then lowers that free roll target. So then instead of coming out the other side with two losses, which I think one was about 6% and this one here is 2%, okay, I'm out the other side break even. So that's why active risk mitigation is really, really, really important. I try and make these ones here a little bit kind of harder and just free roll off of initial stop losses, a little bit more of kind of like a handicap. You're making it even harder for yourself, I think, if you're not employing active risk mitigation in your trading. But that's just how I kind of think about it. But so important to kind of think about that. I think we cover that in the blueprint video on the channel. This just looks absolutely terrible. Below the 200 day, no interest, no interest, no interest. Get back above the 200, back above the 200. No, 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 no. So you see, we just avoid all of this guff, all of this crap. Not interested in it, okay? Okay, feel like 21 day EMA is going to be more appropriate for Shopify. Still choppy in it. Still choppy. All right, let's see. Choppy still. It's a bit up, it's a bit down. Okay, that's better. Okay, I don't know why. That feels like it's probably going to be earnings, but 52-week highs pushing up. Yeah, we like that. We like that. Okay, that's telling me, all right, the bigger boys and girls, they're back in the game. Let's check out demand tail to the 10. Base duration is going to be a little bit short there, I reckon. Okay, 21, shake out demand tail, first retest at 21 after an earnings gap, like it. So we go there. Initial risk, about the same as the ADR. Yeah, so free roll target is going to be, didn't get filled. That's fine. Let's see if it kind of resets down here. I like it. Now it's kind of tightening around the 21. I like it. 4% off an ADR of 4.5%. It's fine. And this one here, what's the lower that day? 57.74. 57.74. Okay, so we get stopped out, so it kind of gaps. Yeah, we would have got stopped out. That's a pullback by minus 4%. Need to get my head in the game, don't I? Pullback by Shopify minus 4%. Okay, that's fine. All right, that's better. But undercut all these base lows. Volume didn't really budge that much. Yeah, that's good setup. Cap down, reversal up. Okay, free roll target is up at 64.93. So we free roll. Our entry is there. Okay, do we free roll there? Again, this is another one where you see it's 11 cents away. So what I do is I just move my stop loss up like that. Okay, that's active risk mitigation. It's really, really, really important. Okay, we have them being able to free roll there, which is good. And we free rolled the position. Initial stop would now probably be up here, something like that, around break even, but we just keep it there for the purpose of this. Okay, first close below the 10. Don't really like it. Okay, close below the 10. Don't like that bar there. A couple bars before either. Okay, tight little bar. Maybe like got some cup and handle type action building here. Yeah, cup and handle type action. Okay, maybe we could target it through there. Okay, it doesn't get filled, but I quite like that bar there. So target there. Free roll target is going to be 68.60 if we get filled on this one. Okay, so the entry on a new position is going to be there. We'll make that one blue. Okay, kind of tightening. So we've got two live positions. Check out demand tail to the 21. That one's going to get stopped there. So that's going to be 4%. And I would exit that one as well. So that's going to be a 4% loss on that one. And then our initial stop loss was, say, 5%. So we got 10%. Then we took some off there. So 10, 7, and 5. So let's go over here. Let's go 10, 7, and 5. So that's going to be a pullback. We've got a pullback and a breakout. So pullback and a breakout. The breakout is going to be minus 4%. I think it was minus 4%. And then this one here, the average gain is going to be 7.33%. Like that. Okay, it's got more choppy, hasn't it? It's got more and more choppy. So let's see. Okay, check out demand tail off the 50. Like it. I target that. Okay, nice. Let's play this one forward. Okay, we've been able to free roll there. It's moving up. Nice. 52-week high. Good volume coming through. Okay, first close below the 10. Take some off there. First close below the 21 is there. That's going to be the exit for me. So initial risk 2.5%. So we're free rolling at 5%. So we've got 5, basically 5%. There, that's going to be a pullback by Shopify and 5%. Okay, let's play this one forward. Okay, don't like any of this action here. Okay, getting back up. Getting sold into. We're getting close to present day now. Okay, I'll just fast forward it to present day. So that's going to be it there, guys. So let's go take a look at the stats there. So win rate around about 50%, 48%. The risk versus reward is extremely healthy at 4.74%. The average gain of 15.99%. The average loss of 3.38%. What do? We did 31 trades, 15 winners, 16 losers, three break-even trades. But as I said there, a couple of these losers, you saw what I mean in terms of the active risk mitigation, where I could have been pushing up the stop loss. That brings the free roll targets down. So that is a strategy I employ in my trading. I really like that. So there's 4 parts to every single trade. Obviously, there's number 1, identify, number 2, control, number 3 is mitigate, and then number 4 is optimize. So that third part of the trade, the risk mitigation, that's where I'm trying to get the risk out of the trade, be there, break even, have free rolled the trade, and then I've got a free look to see if the stock wants to go on a large trend. But expected return is pretty good at 9.48%. So yeah, happy with that. I know I kind of messed around with some of these breakout ones in here, but interestingly the breakouts had a lot better risk versus reward than the pullbacks. Just I know there was some where I was just putting in breakout. I think they were kind of breakouts. So that's just something to kind of assess previous character of the stock when you're looking to trade a stock. Okay, does this stock like breakouts? Does it like pullbacks? Where does it like to set from? Is it 10-day EMAs, 21-day EMAs? So yeah, hopefully that video there, guys, was useful for you. It kind of shows you how you can use deliberate practice, realize that trading is a skill set, and if it's a skill set, it means that you can improve deliberately, or you can improve upon it if you employ deliberate practice in specific areas. So how do you get better at identifying setups? How do you get better at controlling risk? How do you get better at risk mitigation? How do you get better at optimizing the profit? So thank you very much for watching. Thank you very much for all the support on the channel. It is very much appreciated, and I will see you in a future video.